Can you afford a $500,000 home today? Well, today, home ownership is getting harder and harder to accomplish. And I remember when my dad used to tell me that the younger generation would have a more challenging time buying a house, and I never really believed him until I studied finance and how inflation actually worked. It's becoming apparent that the blatant disregard for monetary policy in this country is creating this massive disparity between the rich and the poor. And the middle class is falling behind at a rapid rate compared to the 1970s, when you could afford to buy a house on minimum wage. So today we're discussing the issue close to everyone's heart. It's home ownership, affordability, and owning your dream home may seem exciting, but can you really afford it? So we're going to break down costs associated with home ownership in today's market and reveal what it takes to achieve that. Now, the median home price in the United States is about $500,000. For comparison, in 1970, a single-family home was $17,000, and you could afford a home on a minimum wage. And in 1980, after inflation and 18% interest rates, single-family homes went up to $47,000. This is staggering, and we can use history as a great example. As the great Mark Twain once said, history never repeats itself, but usually rhymes. Now, if you're in New Jersey like I am, you know that the market has been ridiculous and it has not dropped at all. I flipped many houses this year, and homes are still selling $100,000 plus over asking price, and the bidding wars are ridiculous. Even at 7.5%, people are putting 50% down. Now, while the rest of the country is in sharp decline, this is ridiculous. But can $500,000 still be affordable for you? So to help answer this question, here's the monthly payments that we're going to calculate. Now, this is based on current interest rates, and we'll explore what your monthly budget would look like living in a home priced at about $440,000, $450,000. It's crucial to take into account both mortgage payments and additionally monthly expenses that accompany home ownership when making such a decision. So let's begin by breaking down what a typical monthly mortgage payment entails. And your payment consists of principal, interest, property taxes, and home ownership, home insurance premiums, as well as potential private mortgage insurance, PMI, if your down payment falls below 20%. Then this PMI may also be added. So typically with fixed rate loans, where principal and interest remain constant through the loan duration, while property taxes or homeowner's insurance may increase accordingly. PMI lasts until your loan balance reaches 78% of the original purchase price, or around 15 years, depending upon the loan balance reduction or 78% loan balance reduction, whatever comes first. So let's use this example. A home that's priced $436,800 with 5% down and an interest rate of 7.25% over 30 years would result in a mortgage payment totaling about $3,235, and you could download many mortgage calculators in the App Store and just plug in your numbers. I like using the Carl's Mortgage Calculator on Android because it's pretty simple and it shows you the amortization chart as well. It shows you how long it takes if you add additional payments and whatnot. Now, let's discuss budgeting. Adhering to the 50-30-20 rule, allocating 50% of your income towards housing, 30% towards extras like subscriptions and entertainment, and 20% towards savings and debt payments in order to maintain financial freedom and avoid becoming house poor. If you don't know what house poor is, that's when you're overextending yourself and using more than 50% of your money on mortgages, and these mortgage payments should not exceed 30% of your monthly income to avoid that. Now, after factoring in utilities, car loans, groceries, insurance, and more, your monthly expenses could add up to around $6,215, which equates to an annual cost of $74,500 just for these expenses. This should serve as an eye-opener, but don't panic because this is just an estimate. I didn't count Florida as an example because right now Florida is insane with insurance issues. Believe it or not, I sold a house in Miami, and it's actually cheaper for me to live in New Jersey than Miami, and I can't believe I'm saying that. So to comfortably cover these costs, it would take approximately $10,783 each month in gross income to afford living in a almost $500,000 home comfortably. To calculate this figure, divide it by 0.75 to calculate annual gross income required. your annual minimum gross income would need to be approximately $172,533. Although these numbers might seem intimidating, remember they are only guidelines, and everyone's financial circumstances vary, so this breakdown provides you with some insight into the reality of home ownership costs, so you can plan ahead for them. So whether it's be a lower priced home or working towards your dream of home ownership, now you're equipped with knowledge to make informed decisions. And as with anything, make sure you are comfortable with the payments and you can survive with adequate emergency funds. Now, if you like this video, check this video out right here.